Welcome back, listeners. Today we're going deep, really deep, into the world of early 20th century Wall Street
Buckle up.
through the eyes of a guy, a legend, really, named Larry Livingston. It's all thanks to this book.
Reminiscences of a Stock Operator.
Hmm.
A classic.
Chapters 1 through 12 we're tackling today. So get ready for ticker tape, bucket shops, and all that good stuff.
Yeah, it's not just your typical finance book, though. It's like, stepping into Livingston's mind,
Right into it.
seeing Wall Street through his
Okay.
eyes. He built himself up from, nothing to become a major market player.
And he really started young, like 14 years old, working as a, quote, board boy.
Yeah, and right away you can tell this guy's got a head for numbers. Memorizing stock prices, understanding the fluctuations, all of it.
It's amazing, that ability to process all that information and see the patterns.
That's the key, the patterns. He wasn't just memorizing, he was looking for those habits, those repeating sequences in the stock prices.
He had this almost intuitive sense of the market, even then, wouldn't you say?
Totally, totally. But he wasn't just content with, sitting there. He wanted to put his theories to the test, and that's where those
Good bucket shops.
bucket shops come in. Think of them like, betting parlors for stocks.
Not exactly the most ethical places, right?
Oh, they had a reputation.
But man, Livingston thrived there. He was making more money at 15 in those places than at his real job.
Yeah, you can really see that risk-taker personality shining through.
And that competitive spirit, right?
Yeah.
But the bucket shops, they weren't just going to let him win easy.
No. They tried everything, increasing his margins, making it harder and harder for him to actually profit.
And then there's that crazy story, that one about the Cosmopolitan bucket shop.
Yeah.
They tried to, get this, manipulate the ticker tape to avoid paying out Livingston's winnings.
They thought they could just erase his profit.
Just wipe it clean, but Livingston, he caught them, right? He wasn't going to let them get away with that.
Not a chance. He called them out, made them honor the trade. I mean, talk about guts.
That's Livingston for you. But after, basically conquering the bucket shops, he sets his sights on the big leagues, the stock exchange.
New York City, here he comes.
Hmm.
But it wasn't smooth sailing, that's for sure.
Yeah, Wall Street's a whole different beast. It wasn't just about quick wins anymore. It was about understanding those big underlying forces driving the market.
Right, the big picture. He kind of hit a wall in New York, realized his bucket shop strategies wouldn't cut it there.
So he goes to St. Louis, right? And guess what? Dominates the bucket shops there, too.
Oh, absolutely. But it gets even more interesting.
Because they ban him, right? They kick him out for winning too much.
Talk about being too good.
But Livingston wasn't the type to just walk away, especially when someone was trying to, cheat him. So he decides to take on this guy, H.S. Teller, the bucket shop owner who banned him.
Teller.
And this is where things get really interesting.
Revenge time. He doesn't just want his money back. He wants to expose Teller's game.
And so he starts buying up shares of a stock that Teller was short selling, basically driving the price up.
A classic squeeze play. Forcing Teller to cover his position, buying high to avoid even bigger losses. Livingston knew exactly what he was doing.
He used his knowledge of the market and of Teller himself to turn the tables completely.
And you can't help but admire that sense of justice.
Yeah, he wasn't just about profit. There was a principle at stake there, too. So after this, he's back to New York, right? But he's got this new perspective on the market.
Yeah, he understands that speculation isn't just about betting on the little ups and downs, but about recognizing those big trends, those big movements that dictate long-term success.
And to do that, he needed to master, what was it called?
Reading the tape.
Right. It's like learning a whole new language, the secret code of the market. It's
Yeah.
not just about the price of the stock, but about its behavior, its volume, its momentum.
You got to read between the lines of the ticker tape, figure out the real intentions behind those numbers. It's psychology as much as it is math.
He was getting into the minds of other traders, figuring out the collective mood of the market, like when fear was taking hold or when greed was driving things higher.
He was developing this sixth sense almost for the market, this intuition that would guide him in making those really crucial decisions. He was becoming, a true artist of the market, you could say.
It's amazing, that journey from bucket shop hustler to market master, But it wasn't all smooth sailing, right? He had his share of setbacks, too.
Oh, absolutely. Even the best traders make mistakes. It's all part of the learning process.
There's that story about Union Pacific. He had a gut feeling about that one, right?
Yeah, he felt it was time to sell, but he hesitated, second-guessed himself.
And it cost him big time.
A valuable lesson there. Sometimes, even when you have a strong instinct, emotions can get in the way. Fear, doubt, they can cloud your judgment.
Especially in the heat of the moment, right? When the stakes are high.
Exactly. Livingston realized that relying solely on those hunches, even informed ones, could be dangerous. He needed a system, a more disciplined approach.
This is where his emphasis on self-reliance really comes in, wouldn't you say?
Absolutely. He believed in developing your own understanding of the market, not just blindly following tips or the crowd.
He had people throwing inside information at him all the time, but he learned to trust his own analysis.
He knew that relying on others' opinions could lead you astray, especially in a world full of, well, let's just say, conflicting interests.
He was always testing, always refining his methods, learning from both the wins and the losses.
And that led him to one of his most crucial insights, the key to success: understanding the main market trend.
So it's not about predicting those little blips in the market.
No, it's about identifying that dominant direction, the underlying force driving things. He called it the line of least resistance.
Like riding a wave, right? Don't fight against the current, go with the flow.
Precisely. Livingston became a master of spotting those big market swings, those major shifts, and aligning his trades with them.
And that's what really helped him during the 1907 crash, right? While everyone else was panicking, he was shorting the market.
Bold move. But he had the analysis to back it up. He saw it coming. He knew a downturn was inevitable.
Talk about nerves of steel. He stayed calm amidst all that chaos, trusted his judgment.
And it wasn't just about making money. At one point, his own broker begged him to stop selling. His trades were having such a huge impact, they were actually moving the market.
He was becoming a force to be reckoned with.
From bucket shop rebel to market mover.
But here's the thing, right at the peak of that crash, when everyone else is selling, Livingston starts buying.
Yeah, it seems counterintuitive, but he saw it as an overcorrection. The market had fallen too far, too fast.
He was betting on the rebound, even when everyone else was running for the hills.
That takes discipline, that ability to separate your emotions from the situation. That's when he truly transitioned from, I'd say, a gambler to a master.
Yeah, he wasn't just reacting anymore. He was anticipating, understanding those underlying forces.
He was playing chess with the market, always thinking several moves ahead.
Livingston's story, it's like a crash course in the psychology of trading, wouldn't you say?
Oh, definitely. He understood that the market is driven by human emotions. Fear, greed, hope, despair. Mastering those psychological forces is just as crucial as any technical skill.
He wasn't just reading the tape, he was reading the minds of the other traders.
Really?
Sensing those shifts in sentiment, that herd mentality.
He could feel the pulse of the market, its rhythm, the ebbs and flows of those emotions driving things up and down.
And he was always observing, always learning from those around him, trying to figure out, what separated the winners from the losers in the long run.
Like that story about the sporty man who always insisted on stop-loss orders, remember?
Yeah. Always protecting himself, no matter what.
That's Risk Management 101. Limiting your losses is just as important as maximizing your gains. Livingston, he took note of that. Even someone with a gambler's instincts could succeed by implementing those sound risk management principles.
It's about protecting your capital, staying in the game, weathering the storms.
And Livingston's story reminds us that trading is not just about being right all the time. It's about managing risk, controlling your emotions, having a system that works for you.
But even with all that experience, all those insights, Livingston wasn't immune to a really persuasive personality. That whole episode with Percy Thomas, the Cotton King.
Oh yeah, that was a fascinating one. Even someone as astute and independent as Livingston would be swayed by the influence of others. Thomas was charismatic, a master of persuasion, and he knew cotton inside and out.
His word was like gospel in the cotton market. Everyone wanted a piece of his insight. But for Livingston, it would prove to be a mixed blessing, I guess you could say.
Livingston, despite his own bearish view on cotton, he gradually started to see things through Thomas's eyes, questioning his own analysis, doubting his instincts.
It's a reminder that we're all vulnerable to the power of persuasion, especially when it comes from someone we admire or respect.
We can get caught up in their enthusiasm, their confidence, and start to see the world through their lens.
Especially in a field like trading, where emotions are running high and the stakes are, pretty significant. We can get swept up in a compelling narrative, a charismatic personality,
And that's what happened to Livingston. He let Thomas's influence cloud his judgment, and it cost him.
Big time. He shifted his position on cotton, went from bearish to bullish, started buying heavily as the price went up. But then, well, the market turned.
And it turned hard. The price of cotton plummeted, and Livingston was caught on the wrong side of the trade. A tough loss, financially, but probably even tougher on his confidence.
Yeah, it forced him to confront those psychological pitfalls that can trap even the most experienced traders, to
Yeah.
really look at his vulnerabilities.
It was a harsh reminder that maintaining that independent perspective, that unwavering commitment to your own analysis is, well, it's essential. He couldn't let the opinions of others, even someone as respected as Thomas, derail him.
It had to be a humbling experience, but ultimately it made him a stronger, more discerning trader, right?
Absolutely. He came out of it with a renewed sense of purpose, a deeper understanding of those psychological complexities we were talking about, and an even stronger commitment to self-reliance.
It's wild, right? All these ups and downs, the lessons, the risks. Livingston's story, it's like a masterclass in navigating the market.
What gets me is, even after that cotton debacle, he didn't shy away from, taking chances.
Yeah, he needed a break though, right? Heads down to Florida, vacation on his yacht, some fishing, some relaxation.
Get away from it all, right?
Yeah.
But, Livingston, he can't stay away from the market for too long. Nope. Ends up in a brokerage office in Palm Beach. Can't resist that ticker tape, huh?
Like a moth to a flame. And wouldn't you know it, he starts noticing something off about this rally that's going on.
That intuition kicking in again. He was a master at reading the tape, but he also relied on that gut feeling.
Years of experience honed those instincts, you could say. And this time, his gut was telling him this rally, it's a fake out, a temporary thing, about to reverse course.
So he goes against it, bets against the rally.
He does, but not in the way you might expect. Instead of shorting, he buys a ton of Anaconda Copper stock, like 32,000 shares.
Wow. Big move. So he's riding the upswing, but with an exit strategy already in mind.
Exactly. Catch a quick profit, then sell before the inevitable downturn. Smart move, using the market's momentum, but staying true to his analysis.
High stakes poker, right? Timing is everything. But then, wouldn't you know it, a massive storm hits Florida. Communications cut off. He's stranded. Talk about bad luck. Stuck in paradise with no clue what's happening to his big bet. All he has is a single quote before the telegraph lines went dead. Anaconda 292.
And that means
Almost $100,000 down. Just like that. His quick play had turned into, well, a potential disaster.
vacation's over, so what does he do? Starts panicking, right?
Nope. Stays calm.
Yeah.
He trusted his initial analysis, his reading of the market, figured if the rally was real, Anaconda would keep climbing even without him there.
Betting on his own judgment, even in the dark. Talk about confidence.
And guess what? Storm clears, lines are back up, and Livingston gets the news. Anaconda opened higher, but then, just as he predicted, it started to fade.
He nailed it. It's like that storm was a test, forced him to rely on his instincts, his analysis, even when cut off from the world.
And he didn't hesitate. Sold all 32,000 shares, got out with minimal losses. A close call, but it showed his skill, his ability to read the market signals, even when the chips were down.
It's a great reminder, isn't it? Trusting your gut, having the discipline to stick to your plan. But it also highlights something else Livingston was really good at. That understanding of, well, human nature.
He knew markets are driven by emotion. Fear, greed, hope, all of it. And he could read those emotions, anticipate how they would influence the market.
He was like a psychologist of Wall Street.
Exactly.
Right.
And that's why his story resonates, even today. It's not just about numbers, it's about people. It's about understanding those forces that drive us all.
Reminiscences of a stock operator, it's more than just a finance book, right? It's a story about human nature, about risk, about learning, and ultimately about mastering yourself.
And that's a lesson that applies no matter what field you're in, right?
Absolutely. So listeners, there you have it. Our deep dive into the early life of Larry Livingston. From bucket shops to Wall Street, from triumphs to setbacks, it's a journey that's packed with insights and a reminder that success, well, it takes more than just luck. It takes discipline, self-awareness, and a willingness to keep learning. What do you think? What were the key ingredients to Livingston's success? What resonated with you the most? Let us know.